welcome, everybody. We are back, your friends at the Legacy Wealth Capital Group.
We don't play that because it's like we don't care what's going on. We make it happen.
The office pretty much depended on us. If we didn't work, the office didn't work, basically. It couldn't function without us.
I think about like, what could we have done different?
And you could follow that model with your product.
Your service will not sell because people are going to feel that conversation. Welcome, everybody. We are here. It's been a long time since we've been on here live, but we decided that we need to come back and really dive into what businesses need to do in order to grow and scale. And so every week, what we're going to do is we're going to come live. We're going to pick a company that's raising capital, doing equity crowdfunding. That's either Reg CF or Reg A. And we're going to deep dive into what that company's doing, dissect it, and then give you some principles that you can walk away with for your company. Sean, Kyle, how you guys doing this evening?
Great. Not at all.
Outstanding.
One of you guys kind of tell me and just give us a real short version of, because before Reg CF came out, you guys raised capital a different way.
Yeah.
Tell us a little bit about the things that you have seen since you had to raise capital for your company. And you don't have to go deep into a Reg CF. We're going to break into that, but just give the major highlight differences on why this is important and why the audience that's checking in, and we see you guys coming in, we appreciate you, why they should listen to us.
Well, I'll start. When the first time we started raising capital for our company, there was no CF. It was, 504s and stuff like that. And the 504 was 1 year restriction. You had to have an accredited investor. So basically with the 504, you would sell 144 stock, right? And back then it was a 2 year restriction. It might have been a 3 year restriction, huh, Kyle?
It was two. It was 2 years.
Okay. So, but you had to have a relationship with the investors that you had to get in. So, we were, lucky for us, we had relationships with a lot of our clients, but, I hate to see, like, for a person who, wasn't able to have a book of business or anything like that, but so it was, you could only raise $1 million, and it lasted for a year. It was a 2 year restriction on it. And you had to be, be accredited investors. So, it was a nightmare at times. I think with the crowdfunding, what it does is it opens up the door for non-accredited and accredited investors to invest in your product. And instead of a $1 million raise, you're able to raise up to $5 million. And I think that's a huge difference. And with the 504, you wasn't able to advertise. So it was, if you get caught advertising, or you can get in some big trouble. Whereas with the crowdfunding, you're able to advertise, you're able to generate leads and stuff like that. So it's a 360-degree turn of how to raise capital, because again, there was so many restrictions with the 504, and as far as advertising, now you can have investors without even having a relationship with them. So, it's great for any business out there that's looking at raising capital.
Kyle, you want to weigh in, or you want me to jump in here and take it from there?
Yeah, just a couple, points. Like Sean said, when the max we could do was $1 million a year, and now with a regulation CF, you can do up to $5 million a year. That's just astronomical. That's crazy. Again, we had to have a relationship. Now, think about it. There was no social media. There was no Facebook. There was no Instagram. There was no LinkedIn. There was no TikTok, Twitter, X, whatever you want to call it. So now you don't even have to have a relationship. You can put together a video and just put it on social media, and just people can just go to a link. We had to mail packages out, UPS, FedEx, DHL. I mean, our packages, we were mailing the PPM out. I mean, you know how much that cost? We used to have boxes of PPMs that were, those big boxes that they showed. We would have boxes of PPMs and we're mailing them out, overnighting them. And we had all different accounts. I mean, like I said, it's kind of like, we tell people, well, back in the day, it was a horse and buggy, and now you guys are driving cars. Well, that's what we're telling you right now. But look at it, you got a rocket ship to be able to raise capital for your business, and it just baffles me why more people are not doing it. I'm dazed. I'm confused. There's less people now, less minority owned companies that are publicly traded than when we did it back in 2005. It was 14 minority owned publicly traded companies. Now it's only six. And it's about to be, I think, seven or eight that are coming along. But that's crazy. Just that by itself.
Yeah. So let's go into that vein that you just mentioned. I think the reason why more people aren't doing it is because they don't know. What they have heard and what's being taught and what they follow is mortgage your house, home equity line of credit, bank loan, credit cards, bootstrap. These are the things that are taught to business owners on how to scale and grow your business. I was at an event yesterday where they did a poll, what's your number one thing that you need? What's the bottleneck in the business? And most of the people said revenue and getting clients. Well, that's a symptom. The root problem is you don't have the capital to invest in paid marketing and advertising to draw more clients, or you don't have the capital to hire the marketing agencies, the teams, the staff, the employees to drive more clients. So you as the business owner is struggling. And now then we actually look on the other side of that picture and we say, wow, look at Facebook, look at Tesla, look at SpaceX, look at all of these billion-dollar companies or these companies, look at them raise money from private investors, from venture capital, and look at how they grow. But we never connect the dots. Even when I was at a larger event and there was a venture capital panel, the way they said that crowdfunding was not the thing, and I'm like, you're raising money from investors too. So if you don't know in the room, a venture capital firm is using a financial instrument to raise capital from private accredited investors. They're not getting the money out of space. They're talking to people similar to what you can talk to people yourself if you had the same financial instrument that they use. So what I want to dive into today is Isaac Hayes III. He founded Fanbase. If you haven't heard of Fanbase, go look it up, Google it. It's a social media platform that he founded so he could give ownership back to the community, bring a different spin on it, pay creators, and just be different from Facebook, Instagram. He is against the algorithm, so to speak. And he used equity crowdfunding in order to get the capital that's needed to grow his business because he understood that one, he needs capital to grow, and two, he wanted to give money back to the crowd. So we're going to just go through a presentation of him talking through, or us talking through, his success story. And so he just started raising capital a few years ago, but he's done some tremendous, tremendous things with it. Let me take this screen off. Executive summary, proven funding model. He successfully raised over 12.7 million through equity crowdfunding, depending or demonstrating the viability of public capital raises for social media startups. And he used Start Engine's platform. Now, in order to raise capital via equity crowdfunding, you have to either work with a broker dealer or a licensed registered FINRA funding portal. Start Engine is one of these platforms. After he raised that money with a Regulation CF, which is a crowd fund, which is what Kyle and Sean talked about, the rules of a Reg CF are you can raise up to $5 million in 1 year, and you can raise that capital from both accredited and non-accredited investors. In order to be an accredited investor, you have to have a certain net worth, right around $1 million, and about $200K annually in salary. I think it's 250 for couples. So you have to meet certain criteria in order to be an accredited investor. And that if you're not accredited, it limits how much you can actually contribute to investments. His platform vision, a social media platform enabling all users to monetize content from day one, with 200,000 plus users across 170 countries worldwide. And he's on iOS and Android. What is Fanbase? Again, it's free to download. It's a social media platform. All users can monetize content from day one. He has subscription tiers starting at $4.99 a month, a virtual currency called Love, so you can tip the creator that you like. He does take a platform fee, and then there's no algorithmic suppression or shadow banning. Now we know that our Facebook, our Instagram, whatever medium that you may be watching on has algorithms, and they change the algorithm often to fit their business model. What's different about Fanbase? Ad-free experience. Users content takes priority, complete content visibility, direct monetization tools, and user equity ownership. So community members can invest in the company, which is what we're talking about. Founder Isaac Hayes III, son of legendary soul singer Isaac Hayes, music industry veteran, and tech entrepreneur. He transitioned from managing a father estate and working as a music producer to founding Fanbase in 2018. Vision, learned from his father's experience with music rights. So he wanted to build a platform that brought in his experience, his life, and allow the public to invest in it. The funding journey. A lot of us start out trying to figure out where do we get our money from to grow. And again, it goes back to, am I putting it on credit cards? Am I bootstrapping it, putting my own money in? Am I borrowing from friends and family, but it's not really a an agreement? It's just, hey, I need this money. I got an idea. How did he start? He did an initial regulation CF and raised $1 million. Then he did another campaign where he raised right around 3.5 million, and that brought him up to 4.5 million. Well, he did another one, 4.5 million, that brought him up to 10. So looking at what Kyle and Sean said, you can do multiple Reg CF raises over time. And he was able to do that and continuously raise more money. He raised 1 million, did 3.5, did 4.5. So after he completed that third one, he had $10 million raised. And in 2024, this year, he did a Reg A with a $17 million target. And as of this writing, he actually hit that target and closed it. And he offered it at $3.95 a share. So I want to stop right there and Kyle and Sean just get you guys take off what he's done so far with this funding journey and why it's important to the listeners.
Yeah, I mean, I'll start off brilliant. Brilliant. He basically he took advantage of what's out there. Most people are not even familiar with what a regulation CF is, but it's basically it's from the Jobs Act. Jobs Act that President Obama started in 2012. Talked to a lot of people. They say, "Now you heard about this guy? What he's doing?" I say, "Yeah, it's brilliant." I mean, I give the brother all applause, man, because he went out there and he did it. He got it done. But not only that, you see how he slow walked it. And even though, it doesn't seem like that's a lot of time, I mean, he basically in 4 years raised money a little bit. He raised what he needed to get to. Remember, you can raise up to 5 million. So he was doing 1 million or something, 1 million or something, 1 million or something, and he raised up to 10 million. Once he got to where he thought he was good, then he played that last year, he targeted, let me raise 7 million. And the game plan was phenomenal. And he hit it. And not only did he hit it, but now, he hit that target. And for those of you that don't know, a Regulation A plus, what that is, that's a mini IPO. We call that the baby IPO. So that means right now he is going right into an initial public offering, and boom, like I said, he's gonna be good to go. So I mean, outstanding. I applaud the brother. Good job, man. Good job.
Yeah, I think one thing that you will notice is that he had a strong social media presence. I mean, I would see advertisement after advertisement of him talking, of him doing podcast or speaking on somebody else's platform about what he's doing, and the why, you know, um, and people, and also he had a low entry price into investing in his company. I think it was what, 3.99 or something like that was the
Yep,
minimum.
399.
So there's a bunch of 3.99s in there, but he has 200 plus thousand investors. So
Well,
yes,
that's users. He has
is
200,000
he
users.
users?
I think it's
Okay,
17,000 ish investors.
17,000 investors. So some of them are uh, the 3.99s, but some of them are the 20, 30, 40,000s. You know, um, but I always say the CEO's job is to bring money in the company. Especially in the early stages. The executive job is to bring money in the company because that's what's going to keep the company afloat. Investors' money, and to see this brother doing it, and I didn't really see anybody else doing it. I just saw primarily Isaac Hayes doing it. Um, I mean, he did a phenomenal job. I mean, you can't do anything but praise the brother of what he's accomplished.
Exactly.
And how I want you as the audience to think about this is if you are starting your business or you're growing your business or you're at a position where you need more capital, this is a pathway for you. It doesn't have to be where do I get the money from? It needs to be a commitment that you make to do something like this. Now, as an equity crowdfund, I believe it's available for everybody and it's a tool. You just have to figure out when is the right moment for you to do it in your business because it can take you to the next level. Also, you have to get around in your mind. And I was talking to a lady today who owns three hair salon spots, and she wants to expand. And I told her, I said, you have the mentality of the big picture thinker. Most business owners aren't thinking about how do I raise capital to scale my business to a bigger level. They're just trying to get to the first 100,000 or the first million. They're not thinking big enough. I also saw in an article where people always ask about venture capital dollars, and even people who want to get money, they want VC dollars. I want to work with a VC firm. Well, a VC firm is not interested in you if you can't show them how you're going to be $1 billion idea because they know that 9 out of 10, 8 out of 10 are going to be bust. So they're banking on the one unicorn, the one decacorn is going to pay everything back and get them their return. So if you're not thinking large enough as a business owner, start there. Like you got to get beyond just thinking, I want to make enough money to pay my next bills. You can get a job and do that. But when you talk about expansion, when you talk about growth, when you talk about scale, it takes real capital to do that. And you can take advantage of the same instruments, the same processes, the same procedures that Isaac Hayes did and others. Let's keep moving on this.
Well, you know what? Real quick, let's go back to that for a moment too, because the one thing that I think really people really need to grab hold of about what Isaac Hayes III did is this: everybody's out there trying to be a podcaster. Everybody out there want to be an influencer. Y'all studying the wrong folks. You need to study what Isaac Hayes III did. While everybody's trying to be an influencer and getting paid from Yahoo and Instagram and all these other folks for how many people you got following you and things like that. Well, guess what? That little bit of money that you're making, do you realize you're doing it for a public traded company? Isaac Hayes III created a public traded company. And if you're an influencer, you need to be thinking like him. He said, why am I going to influence and do this for some people? Because he did it with another company. If you guys don't know, it was Clubhouse. He said, I ain't doing that no more. I ain't going to be an influencer for them no more. I'm going to create my own. So applaud the brother. Brilliant.
Yeah. He also has mentioned, the when he's talking about the culture, to your point, creating the content. The culture dominates the content, but the one who benefits the most is Mark Zuckerberg
Yeah, yeah.
and sitting at the top because it's his platform and we don't have ownership. So not only did Isaac Hayes create something and have ownership himself by doing an equity crowdfunding and allowing everyday people to invest, we have ownership too. And so I love what Trap Wall Street Trapper, what they are doing, earn your leisure with. You got to get in the market, invest in the stock market. But the real money and the wealth is made before the company hits the public. It's made right now in the grassroots of Fanbase.
The
Those
pre-IPO.
early adopters in Fanbase, and there's a bunch of other companies. We're just talking about Fanbase tonight. The early adopters in Fanbase that invested in that company when he goes public, and you let's say you came in at $3 a share. When that company goes public, and it might go public at five, seven, eight, nine, I don't know, $10 a share. Do the math. How many shares did you get at three something dollars per share versus now they're worth $10 a share? Versus you going and trying to buy Facebook that's 200 plus dollars a share, and you can only buy three shares of it because that's all you have.
Right.
But we're not thinking that we're at the end of the game, not at the beginning. We're jumping in when it's already the train is left and we're trying to catch on to it versus getting on the train when it's stopped and stationary and when it's available. We're always chasing and not in the beginning. That's the mindset shift that we have to take. And we have to look at these opportunities and get away from the hype. Because trust me, the market going up and down, I see the post every day. Oh, this hit, but you only got three shares in there, so your growth is only $10, $15, because wealthy people can invest in the stock market and really get gains because they can drop $1 million in the market. They can drop 500,000 in the market and see that growth change. But for us, everyday investors and people who just want to get in, these are opportunities like what Isaac Hayes III has put together that allows us to do that. Looking at the Reg CF campaign, what is a regulation CF? We talked about it. Allows you to raise up to 5 million. And Kyle, get this. They are submitting and pushing to move that number up to 25 million for Reg CF.
25 million?
25 million.
In a year.
25 million. So
Nice.
that's on the SEC table.
Jeez.
Nice.
So it's going to be basically almost like
A plus.
A plus. Exactly.
It's going to be revolutionary.
Tier one.
Because A plus is what, 20 million, right?
Yeah, tier one.
25. Yep.
Is it 25 million? A
I think
plus?
it's 25. 25, something in there. Somebody fact check us.
I thought it was 20.
Yeah.
But if you look
tier
at Fanbase's track record, campaign one, they raised $3.5 million at a $20 million valuation. Then next campaign, 2 million, a little over 2 million at a $50 million valuation. So why is that important? It shows that they're raising that price per share and they're growing. They're using that money and they're growing. And then campaign three, 10 million plus, over 2,300 investors participated. Of course, when you invest in a crowdfund regulation CF, there's some disclosures that you're going to see on the site. You're going to get company information. You're going to understand the business, the management team, the corporate structure. You're going to see financial statements because when you raise over, I think it's 1.24 million, you have to have audited financials. That means a CPA or auditor is going to look at the financials of that business and sign off on them and say, yes, these are legitimate transactions. Offering terms. I want to say, yes, he did Class B non-voting. Share price and valuation, has minimum and raise amounts, and then use of proceeds breakdown. Every raise, whether it's a crowdfund, a Reg A, a Reg D, they're all going to have risk factors. Every business has risk factors. So here's where competition, user acquisition and retention, platform scalability challenges, and investment and liquidity disclosure, because you can't just, these aren't like open stock market. You don't buy these and sell them immediately. You have to hold them. Then he did his Reg A offering. And I think this is where, because his Reg CF were quiet, but that Reg A was all over social media. He did a $17 million offering, which he hit. $3.95 per share. Minimum investment was $399. $160 million valuation on that company. And so the tier two regulation A allows us raises up to 75 million in 12 months. Once you hit that, again, these are tradable shares because it becomes the mini IPO. And so the current stats, he did hit the target. Planned use of funds. Here's what's important for you as a business owner: use of funds to expand his development team, to scale the platform infrastructure, to enhance creator tools and features, and then to pour back into marketing and user acquisition. So for you as a business owner, when you're talking about, oh, I need more clients, well, you need more clients because you need to market more. Well, where do I get my marketing budget from? Raise the capital. Oh, I need to hire some people to get me out of the day to day. Where do you get their salary from or their money from? Raise the capital. Oh, I want software and tools and AI and all this extra stuff. Where do you get the money from? Raise the capital. Some of you are just trying to beat the pavement so much, and all you are trying to do is just, if I can get the next dollar in, if I can get the next client, if I can just hustle, hustle, grind, grind, hustle. It's not the smart way to do things. Sean, I'm gonna stop right there because I want you to tell us. You say it all the time. What is the richest man in the world doing?
Raising capital. Raising capital. I remember I was presented with a deal that I believe he was raising 7 billion for the Neuralink. I believe it was either 7 or 5 billion for Neuralink, and they were looking for investors. That's either 5 or 7 billion, not million, billion. Now, can Elon Musk afford that? Could he afford to, you know, get some money together and pay for it? But he's like, well, why pay for it? Why should I pay for it when investors will pay for it?
I was on a podcast today with from not a podcast, a webinar from Crunchbase. They pull all the venture capital data over 2025, and they were going from 2018 to 2025. Almost 80%, 70, 80% of capital went to AI firms.
Hmm.
But guess who the AI firms were? ChatGPT and Claude. It wasn't to
Wow.
all the small people. The money is being sent to they were talking about how majority of venture capital funds and dollars are going to the top super companies. It's not going to everybody at the bottom. I saw Anthropic just raised for Claude $20 billion. The money is there. There is no lack of capital in the world. It's all about the mindset of you saying, can I get my piece of this capital to fund my business and fund the growth around my business versus trying to bootstrap and just grind your way through. I told a group last night that if I knew what I know today, I would not have bootstrap businesses. It's just, it doesn't make sense to do it. It doesn't make sense. Now, how you raise capital is important. When you raise capital is important. But this whole thing that we're getting bamboozled, like Kyle said, hoodwinked into, that you got to grind and your shirt off your back and you struggle all the way to make your business grow. And let's be real, most businesses don't ever hit $1 million in revenue. Most minority owned businesses never hire an employee. So you're not scaling anyway. You're doing all this hustling and grinding and struggling and never scale when there are investors out there looking for capital. And they're sitting on I'm looking and reading. This is why research is important. How the private equity firms that are primarily middle market, upper middle market, are sliding into lower middle market and Main Street because they got money, and the investors like, I need you to put my money on the street. Don't just hold my money. So there's money out there. It's all about what are you going to do, and are you going to be a part of that raise in that capital? Now let's look at the industry context. $1.82 billion was raised last year with equity crowdfunding. That's Reg C, F Reg A. 40% of the U.S. or US market share. That's 40% US of the global market. Reg CF success rate was 69% in 2024. So people who set their target, 69% of those companies hit it. And then the growth over the next 8 years, 13.8%. Technology and startup businesses dominate at 40% of equity crowdfunding campaigns. Reg A surged 124% to $546 million, while Reg CF grew to 343. The average Reg CF raised around 346,000. Average tier two was 12.5 million. Retail investors are increasingly participating, and startups represent 62% of all equity crowdfund campaigns globally. So if you're a startup and you're like, okay, how can I get funding? I got invited to a pitch competition last night. I don't know how many businesses go to pitch after pitch after pitch trying to win the next $5,000, Kyle. What are you going to do with $5,000? Nothing. It
Pay the lawyer.
barely moves the needle.
Right.
You're going to pay. They take that 5,000 just to pay to go to the next pitch competition.
Right.
Try to win the next five and the next five. I listened to a lady say at an event that she won 5, 10 pitch competitions, 50 grand, but still need capital. It's not enough, not thinking big enough. And then this was just how major platforms compensate. So when you're doing market research and you're doing competitor research, it's important to know what your competitors are doing. And so Isaac Hayes had to have looked at YouTube, TikTok, Instagram, Facebook, Twitch, Patreon. How do the creators get paid? What are their key features and what will make him different? And that's probably how he came up with how he will build out his platform. Everybody wants to be a YouTuber, but you're getting $1 to $5 per thousand views. And I know that may have changed a little bit, but how many thousands and thousands and thousands of views do you got to get before you make $100? Before you make $1,000?
Right.
The creator economy is $203.6 billion, 1.18 trillion by 2032. Are you going to be an owner in that economy? Or are you going to create content, get paid a little bit while those who own the platforms dominate and make the most money? That's a question you have to ask yourself. Key takeaways. Fanbase has raised 12.7 million through Regulation CF and 17 million with a Reg A. The platform demonstrates an alternative funding model that enables community ownership. Fanbase differentiates itself from other platforms by allowing users to monetize content from day one with transparent revenue splits and user equity ownership opportunities. Is operating in an economy and market that's just going to continue to grow. I'm sure that he's probably going to do another capital raise because he's competing against established platforms.
Mm-hmm.
And they raise capital too. And they're publicly traded. So everything that happens now, they push and they pull on the public markets. And then success shows viability of equity crowdfunding for social media startups with a clear progression from seed capital to growth capital. So you want to make sure that and then you can go check them out at fanbase.app, startengine.com/fanbase, which I believe the raise is closed now because he hit his goal. So that should be closed down, but you can just look at the structure of the raise. And I think I might bring it up. And while I'm bringing that up, you guys add in on that piece.
I mean, he's doing a phenomenal job. I mean, you can't fault him for going out there and getting the money. And like I said, I don't never see anybody else's face that's out there. I see only his. So
Yeah.
he's doing what he has to do.
Yeah. That and I hate to say it, unfortunately, but it's fortunate for Isaac Hayes III. He's another person that got bopped in the head by something But instead of just turning around and just, accepting it, he said, look, hold on, wait a minute. How many times am I going to keep letting this stuff happen to us? And that was the same thing with Sean and I. When we got started back in, the early 2000s. I mean, we were raising capital. We were venture capitalists. And we kept being in meetings, or we kept being in places where every 6 months or so we were doing another project. Raise capital. After we get hit the mark or whatever, then they had to find a new deal to raise capital. And we're like, we keep raising capital for these other companies. Why don't we just put our own thing together and raise capital for our own thing? Like, why don't people think like that? I don't know why, but Isaiah the third was like, hey, look, you know what, man, we brought all this attention, all this creativity to this one platform, and guess what? They turn around and go public, and we don't share in any of the wealth.
Mm-hmm.
He's like, let me put one together, and we can do it. Brilliant. That's outstanding. Why aren't more of us thinking like that?
That's good. And what we just talked about, which is very interesting, is I said, oh, he's probably going to do another one. And so he's already, I'll make this full screen so we can see it. He's already taken reservations for a possible upcoming round. You can indicate your interest today. What this means is when you don't have your paperwork filed and it's not approved for you to raise that capital, you can't take money. And so what you can do, though, is what they call test the waters. And you can do that with a Reg CF and a Reg A. You can test the waters because you can do general solicitation, put it out there, see if there's interest. So for you that are listening, you're like, I don't know if crowdfunding will actually work for me. Well, you can go as far as testing the waters and see. See if people will reserve some funds. See if they will support you before you even launch. Just as it is, test the waters. Now, there are some regulatory things that you have to go through in order to test the waters. You have to have certain language. So all of these things, you need to talk to an attorney that's familiar with capital raising, SEC rules, so you can make sure you're always compliant. That's the biggest thing here is compliance. We're not raising money under the table. We're not asking people, can they buy into something? We're doing everything above board legally. That is how this works. This is regulated crowdfunding. This is not Kickstarter. This isn't GoFundMe. This isn't the other things that you think about when you hear crowdfund. This is regulated investment crowdfunding. So he's got his reservation page up. He tells you what he's previously raised. So he's raised 27 million previously. Now he gives you reasons to invest. Most, I would say all crowdfund raises, Reg CF, Reg A, follow the same or very similar structure on their page. They give you their reasons to invest. Some have a video here versus just an image. It just depends. They show you who their team is. You can learn more, see more. Then they tell you a little bit about the platform, graphic, some highlights, tells you the problem. Look at that. Creators make it, platforms take it. And all creators can buy into that. Then it goes into your solution. And I like how it has a solution in text and then an image that basically sums the text up. Revolutionizing creator revenue. So he actually breaks down how the system works, just like we went through. It's free. Then he has some subscriptions. Then he has a revenue model telling you that there's multiple ways as a creator that you can make money. Then he has feedback from the creators. Then he tells you the market opportunity. As an investor, you want to know how you're going to get your money back. Well, how do you get your money back? If you know that it's going to tap into a market that you can actually make some money. I like this. Most people just give a big old market. Here's the TAM, the total addressable market. That's everybody that's in the creator economy. Well, can he serve everybody? Absolutely not. But he can possibly have a serviceable addressable market, people that he can actually touch. And then who did he think he could obtain? So next time you put your pitch deck together, or if you are an investor listening and you're reading a pitch deck, see if they break down most people give this number because it's the big number, what everybody wants to see. But this shows that you really did your homework.
Right.
Then, of course, we keep going down, talks about the demand. And these pages are long. And I'm going to tell you why they're long as we get through it. Go through the traction. It's basically a pitch deck on a web page. This is what this is. Competitive advantage. We keep scrolling, how we compare. Again, comparing to the platforms that are out there. Flywheels, use of funds. This is probably one of the most important pieces on this page because SEC, FINRA wants to make sure that investors are protected. That means whatever I'm saying that I'm going to do with the money that you invest in the company, here it is. Now, when the auditor, and you go back, this is why audits are important. When they go back and audit the accounts, they're going to look and see, did they spend that money the way they said? Or did they buy themselves a house on the beach and fund their wedding and a couple of cars with some gold chains and they on the private plane and champagne bottles? Because what happens is when you do that, you end up getting a knock on your door. Kyle, what show they end up on?
My favorite TV show, American Greed.
American Greed. Full of good full of good old people who raised a lot of money and did the wrong thing with the money. So it's important to know that he wants to put 45% ish towards product development, that he wants to do marketer and creator acquisition, operations and infrastructure, strategic reserves. That's a set aside. Then a nice little graphic to break it down. So then it tells you the reserve today. So whenever that next raise pops up and it goes live, you are already in the system ready to go in and drop your money. And so this is how that structure of this page pans out. Now, Tyrus, why is it a page like this? Why is it just I can go to the website or I can call him up and he can tell me the details? Well, in order for investors to be protected, they all need to be looking at the same information. It can't be a promise here that it wasn't promised to that person, or something changed here or something changed there. So what happens is when you want to invest in a Reg CF or Reg A, you are directed to a page like this that has all of the information here. Everything is here. When this becomes live, it's going to have what's called a Form C if it's a Reg CF. And that Form C is basically your contract, so to speak. It's going to have everything about that company on that document. And I'll go to one that's live so we can actually just pull up a Form C really quick and look at it. I don't want to take y'all too deep in this. Oh, Mr. Wonderful. So if we look at the offering circular, this is the document that has all the information about this company in there. So you as an investor can go read everything, and this is a Reg A. You can read everything about this company on this page. Now, that's a lot of stuff. But as you can see, it just keeps going and going and going and going and going. So it takes a good amount of work. This is why you want to work with attorneys. This is why you want to work with good people. This is why you want to work with legitimate folk. Because as you put these things together, this protects the investors. This gives you all your information. And this is where you would find it on these links. The power of this is you can do this too.
Yeah.
Mhm.
As a business owner, startup, founder, and even if you are 10 million in revenue, their company's doing 15, 20 million in revenue. And they may just need to pool some funds together. They can use these instruments too. And so what we have to do as business owners is to really change the way we think about number one, growing and scaling our business and where we're going to get capital from. And as everyday people, if we talk about the streams of revenue, you should be an investor. And there are plenty of opportunities where you can get in and actually invest, make impact in a company, and watch that company grow and be a part of it. Yes, you can always drop your money in the S&P 500, the top 500 companies.
Mhm.
Yes, but there are many other companies that are also available for you to invest in, that are profitable and that are growing. There's not just the five companies you hear every day: Microsoft, Apple, Alphabet, Tesla, Facebook. It's like every person that sells you a stock course tells you to invest in the same five companies. But you could build a company, grow it, get investors, take it public, and you can be one of those companies that people can come and invest in. Now, that's a whole different topic for a different day. We ain't gonna take them down going public tonight. We just wanted to show them what someone like Isaac Hayes III has done. He is democratizing investing, or he's a part of that movement to allow everyday investors to own a piece of the technology that the culture is building anyway. And instead of it all going to Facebook or Instagram, it can all come around and we can all share in that success as well. Not without risk. There's always risk, but the same risk that he has is the same risk that Meta had. But people backed them and pushed them across. And so that's, I think, Kyle, that's one of the keys. And I'd like to hear your opinion on that. That's one thing I often hear. It's risky. I might lose all my money. But you use, and we have pushed these big platforms, and they had risk too, and they were almost out of money too, but they
Mhm.
got pushed over. If you watch, and I'm gonna let you get in, Kyle. If you watch the thing about Jeff Bezos, his show, man, he went back, almost went bankrupt a couple of times.
Couple of times, yeah.
Uh, at the midnight hour, able to pull the money in to keep Amazon going. He didn't just hit it and he struck gold and it was all rainbows and sunshine. He almost failed multiple times, but he kept going. Talk about that, Kyle.
Yeah, that basically is part of business. I mean, it's going to be ups and downs, and it's highs and lows. It's nothing different. It ain't all hunky dory and milk and honey. I mean, sleepless nights. How are we going to hit payroll? You know what I mean? You know, basically, you got rent coming up. You know what I mean? So yeah, it that's the reason why you want to surround yourself with good people, and that's the reason why you want to put people in place that are going to execute the plan. Plan your work and work your plan. But you can't raise this money, get these funds in, and then now you're not executing or you're not getting the job done, because basically, you know, that's where the risk comes in. And when you see where it says risk factor, it's speculative. You could lose your entire investment. So what we try to do is when we work with businesses and we work with different companies and leadership, we try to make sure we take a real good hard look at, who's operating, who's working this, who's going to get this done, what experience do they have, can they do it, have they done it before? Those are the things that we look for. Who's your board of directors? If you do have to go to a resource, or if you do need, some resources, is there somebody on your board that can help, kick in for that? And you might have to pay them back in stock, or maybe a convertible note or something. You know what I mean? Promissory note. You could basically do that. But we did that. We had got a loan with some business or whatever, and we wrote a promissory note. Why? Why did we do a promissory note? Because a note, basically, after 2 years, a debt can be converted into free trading shares. So that's what we did. We got a note of $50,000 in our Sean business. We did that. And then, when we ended up selling the company, the note that we sold the company to some other people, and they were calling up the person who held that note because they were trying to buy that note back. That's how important it was. So yeah, so very, very important. But again, very speculative, risky. But however, think about it. Microsoft had the same stuff. Amazon had the same stuff. Nvidia had the same stuff. So where there's no risk, there's no gain. So if you want to get into this game, if you're in business just on your own, that's a risk. But instead of risking your mortgage or your life savings or your 401k plan, do it with investor dollars. because in your paperwork, you're acknowledging them. In your subdocs, you're letting them know that there is risk, very speculative, and you could lose your entire investment. That's what we call CYA, so that you don't end up on my favorite television show.
Sean, you talk to business owners every day just like I do. It seems like there's always this hesitancy to think bigger. Where do you think that comes from?
I believe it's first of all capital, and I believe it's fear because a lot of people think if you grow larger as a company, is more responsibilities. You know, there's a reason why. Um, I'll give you an example. So we went to a conference, and I was talking to an accountant. He had something like 100 something offices around the country of the U.S. And he was saying like, I was telling him what I do and how we can help him and benefit his business. And he was just like, I don't want to get my company taken over. I don't want to raise capital because if I raise too much capital, then somebody else may take my place. This guy was a CPA. You should know this type of stuff, right?
You would think, right? You would think.
Yeah. But this guy was fearful of taking his company to the next level simply because he didn't understand that if you structure your business right, then you won't get it taken over. Nobody's really looking at taking over businesses, but especially if they don't know what they're doing. They rather invest in the business and have you run the business successfully, especially if you're already been successful. Well, most people not looking at taking over your business, right? But a specialized industry or a specialized uh, thing like a CPA, a normal person can't really run a CPA office, right? So his was fear. And when I say money is because a lot of people get comfortable with what they have. So I'll give you an example. If you're making $1 million gross and you're making $300,000 a year, coming home, going in your pocket. And now you got to take some of that money and dedicate it to something else. Yes, it can possibly grow your company larger, but in their mind, they're thinking like, wow, my lifestyle is going to change. And if I lose this money, then the money is not is never it's lost. It's gone.
Mm-hmm.
So I may go from 300,000 to 150 because I dedicated 150 to raising capital, right, through marketing and stuff like that. And I may lose all that money. So it's a fear and it's a money aspect of it. So it takes a special person, special mindset to want to go out there and raise capital and take your company to the next level. Because, just think about it, Tyrus. We've been talking this language for 30 years. And yet, there's only, I think Cal said it earlier, 6 to 8 minority-owned companies that's publicly traded. We've been talking the same language for years. So there's a disconnect somewhere.
I know what a disconnect is if y'all want to know. I can do a whole nother podcast on the disconnect. Hype. Instead of we, and when I say we, I'm talking about just people. No color, race, nothing, just people. People get caught up in hype and they get caught up in the fast. And social media has just poisoned the mind of great hardworking individuals to believe that they can shortcut a process and skip steps. And then, like we were talking about last night with the group, they want to make it so elusive. Like, The only way I can captivate you is if I talk a certain way and I'm spinning my words around and I'm like a wordsmith. Now you believe me because I'm a word because it sounds good, but there's no substance behind it. This is words. You get caught up watching somebody with a fake Rolex. I remember years ago. I remember years ago, my
Folex.
uncle had a Rolex
No, he had a
fake,
Folex.
and he had Rolex in there though. It was like it to put the words in there. You people get caught up. Even Turk, young Turk, when I was watching him on Drink Champs talk about the old Cash Money, he was when they were asking him back then the day when they started, was it bling bling? He was like, nah, it was bling blam. That they were wearing fake jewelry. We get caught up in that and believe that it's real, and then you try to follow the footsteps of somebody that is making their money off of selling you a dream but has no business foundation. I was listening to again the venture capitalists talk today about AI as a whole, and they said basically they were saying that most AI is going to the bubble. They were talking about the bubble. That there's going to be a bubble and it's going to burst because most AI isn't what they call defensible. They don't own the underlying infrastructure. They're just baking on top of it. And so it's not yours. It's just like all just what a couple of days ago, whatever happened with TikTok, all these people lost their TikTok stuff just recently.
Yeah.
Yeah.
They got bought out or something.
It
Yeah.
don't belong to you. And
Yeah.
so anytime the algorithm wants to change, anytime something wants to change, you don't control it. And when you don't own it, you don't control it. And so right now the hype is AI. Oh, AI everywhere. They're doing AI. I said AI conference every day, AI workshop. My thing is, what are you gonna do with the AI? What are you gonna do? All I see people doing is making videos and graphics and having fun, making images of themselves and laughing and like, what is that? Like, how does that move the needle for your business? It don't, not at all. And what's gonna happen is the people who are gonna make money, your Anthropics, your Chat GBT, Open AI, your X AI, they control the infrastructure. They're building the data centers. They're going to make money off the application layer. You got to have the other people like NVIDIA that's making money off the chip and all the product and the hardware. And you who got excited about making slides and PDFs and books and pictures, you're going to be in the same place that you were in before. That's the disconnect for me. We never want to run a real business. We want to have fun in business. We want to do the hype thing. I want to pop the champagne bottles. I want to be at the private parties. I want to be at the yacht party. But we never build a business that allows you to live that type of life. I remember somebody was saying that they were on a yacht and Jeff Bezos' yacht pulled up beside theirs and made it look like a boat. That it was just massive.
Yeah.
But you don't ever hear Jeff Bezos talking about a yacht party either.
Yeah.
You don't ever hear any of them guys talking about or flat. They don't have to do that, but we get caught up in that. And so even, that's the disconnect for me. I don't see anybody teaching how do you run a real business, legitimate business. They just teach people how to talk, be hyped, put on the best event, and we all feel good and we dressed up. But the numbers prove it. And what's his name? I don't know his name, but I know he's the guy that caught a lot of heat from the gathering spot because he went on social media talking that same language. He was like, everybody ain't millionaires because the data say they're not. And then they called him a hater. The numbers don't lie. Everybody not a millionaire if most business owners, only 4% ever hit $1 million in revenue. So you telling me all the people we see online, they the 4%? I don't believe it. And I definitely don't believe when I worked with some of them and I couldn't get paid.
There's an old saying, numbers don't lie, people do.
That's what it is. But with all that being said, we are living in the greatest time of opportunity ever. John Hope Bryant preaches that capitalism mindset, economics. Get in, get into it. Buy you a business, grow a business, scale a business, raise capital. It is there for all of us to do. But yet we still want to play around with the hype stuff. Everybody want to be a coach. Everybody want to be a content creator. That's why when I saw, yeah, we just saw the creator numbers, $1 billion industry growing. That's why I brought that idea to y'all. I didn't say, Sean, Kyle, you know what? Let's go be creators. Let's go be content. Let's go put us a YouTube channel. Let's do that. Nope. I said, let's own what they gonna need to do that. That's what we got to get to thinking.
Exactly.
Even Damon John mentioned that when he first got into Fubu, he was struggling to pay his mortgage. But you know who was making a whole lot of money? The gene maker in China. he got paid while Fubu was struggling. That man was making millions. Now Fubu came up, Damon John did his thing. But there's always a person that's behind the scenes that's a part of that ecosystem where the money is to be made. And I just implore you guys as you listen, become a part of the ecosystem that's getting paid and not on the hype train trying to follow what everybody else is doing. Because you can do it, you can raise capital, we can show you the blueprint, walk the steps. We're walking the steps ourselves. So that same reserve page that you seen for Isaac Hayes for Fanbase, ours is about to be live too. So we're gonna actually practice what we preach and walk the steps. We got what possible acquisitions that we're talking in negotiation with now? Three. So we
Before
are
we
actually practicing what we preach.
before we launched,
Before,
before we even launched.
Before we
yeah,
launch, yeah.
3 acquisitions before we launch. So we're going to blueprint, show that, and as each week, we want you to tap in. I want you to share this. I want you to bring people who legitimately want to either A, be investors and figure out how to do that, or B, have a business and want to grow and scale their business and really do it. Really do it. Not, oh, I just want to make them enough money so I'm comfortable. We're talking generational wealth. I don't want to hear nothing about no what we said it was last night. Infinity banking.
Yeah.
No. I don't want to hear nothing about no trust and all these different LLCs. I got one trust, 20 LLCs, and something else because I'm hiding and shifting and I ain't got to pay taxes. No, we're not doing none of that. There is a place for trust. There is a place for some of that structure. But if you're not in that place, you're just not in that place. And we got to stop this listening to people telling people about how the Rockefellers did it. The Rockefellers did it by, you can just go read history, buying up competitors, taking them over, and dogging them out and controlling. That's how they became wealthy, by putting other people out of business. They didn't get wealthy by doing an insurance policy, and that's how they got their money. No, he was a billionaire before they started doing all that extra stuff.
Yeah.
So we got to get that stuff out of our mind. We got to get this, like, if you want to talk tax structure, we'll bring a tax person on that will give you some legitimate things. I don't know, Kyle, how a non-tax or a non-CPA be telling people how they can get away from paying taxes. I don't understand it.
Yeah,
Well,
like Wesley Snipes.
if they had been on the call last night, right, they would have found out.
Yeah.
We
Wesley
put, we,
Snipes had that same person. They found out the hard way.
you know,
All right, good people.
my
We're a
favorite
little
joke.
bit over hour. We're a little bit over hour in. We just want you to follow us on the journey. We want to do very similar to what Isaac Hayes III said he was going to do, which is make a change, make impact, and offer an opportunity for others to come along with him. We want to do the same thing. We want to democratize investing. We want to make business open and available for everybody who wants to legitimately start, grow, and scale a business and show you the pathways. And we're not coming on here with the secrets that private equity and JP Morgan and Morgan Stanley won't tell you. No, they're not going to tell you because you can't afford to get in the door. But if
Yeah.
you have 5 million, $10 million net worth, they will tell you the secrets. I promise you. You can go sit down with them. They'll take you all the way through there if you had the money. They're not going to tell you because you don't have the net worth to talk to them. That's the key. So there are no secrets in this. We just been looking at the wrong thing. Sean, Kyle, I'll let you guys finish up and we'll get out of here.
Good. Yeah, I just basically again, great topic tonight, and once again, hats off to Isaac Hayes III. Again, he had the courage to be able to build it, put it together, and not only that, but execute. That's the main thing. You can think about it, you can try, you can do it, but you got to execute. I'm sure he had some challenges, I'm sure some hurdles to overcome, but he did it. Congrats, and there's more to come. So, but good job, congratulations, my brother, outstanding. Once again, I applaud you. Outstanding fan base.
The industry we are in is generational changing, right? Everybody talks about breaking the circle, breaking the cycle, right? And because most of us come from one parent household, and all of us seem like we was all poor and stuff like that. I mean, I know I was until my mom got a job at General Motors. I mean, I didn't know anything about this industry until I joined the military, and I spoke to a British guy, and he told me, a couple of books to read and stuff like that. Then I had a chance to go out to California, move out there, and learned a lot more. Became a broker, but it's an incredible industry, and it's so much wealth in this industry. Stock market is trillions of dollars. It's a huge platform of company worth billions, you know, tens, 20, hundreds of billions, trillions of dollars that's trading every day. Don't think that you can't get on there as well. Don't think that. Like I said, I came from nothing, and I learned the business, and I was able to take companies public and stuff like that, and take my own company public, and we're working on our own company to take that public again. But it will change your life forever. If, but it takes a little time. It's not an overnight success, but if you put in work and constantly have your face out there marketing and promoting your company, the same stuff you do, people do every day when they're not going public. They do the same thing, but now you throw this vehicle on it, and it could change your life. It could change your family's life forever. Like I said, I'm in it to take care of my grandkids, change the cycle from my family, and be able to help, my grandkids my great grandkids who probably won't even know me, their lives. That's why I'm in this. Again, Isaac Hayes the third, man. I give all the praise to the brother, because he's doing incredible things, man. He's taking this stuff to a different level, especially on social media, because it's not too many of people of his color on that have a social media company. So I give all to raise, all that capital, man. 27 million. It's incredible, man. That's nothing but praise for my brother, bro.
Absolutely. And to close out, I already got the next company for next week. We're going to talk about Jersey Mike's, because Jersey Mike's just sold. The owner just sold to private equity.
Yep.
And now they file to IPO.
Yep.
So we'll be able to watch the journey of a private company that was held by an owner for years, who sold, became a billionaire, and now they're about to take that company public. So that's a whole different animal of what private equity does and how they level up, because there are levels to this. And so we'll talk about Jersey Mike's next week so we can explore the levels to this business as you continue to grow and scale. We appreciate you guys. Thank you for joining us. Remember, share this, like it, bring people on who talk business, bring people. Bring your incubators, your accelerators, your college groups, your masterminds. Bring all of them on, because I guarantee you, everyone I was talking about scaling a business, everyone's telling you that you need to do marketing, sales, hire people. None of them is telling you how to get to the money. They just tell you to do more, work more, grind more. A lady that was speaking from the SBDC yesterday, she said, if your business requires you to do more in order to scale, it's not stable, it's fragile. I said, ooh, that's true. Because I've had a number of clients that when it got a little shaky, they had to do more as the CEO, as the owner. They had to pull the team behind them. And I think, Kyle, we gotta get out of here. I think we've been tricked into that, believing that we gotta pull everybody in order to be successful versus just solving what the problem is, which is capital.
Yep.
Once you solve that problem, you can hire you some great people that will pull right alongside with you. So
You
that's
know,
all we got, good people. Uh-oh.
no, only because you opened it up. You opened up that can, but you know what? I got to tell you, again, I'm surrounded by a very wealthy individual, and basically, he said exactly that. When there's a problem, guess how he cures it? Throw money at it. That's how. Whatever's going on, throw money at it. Now, if you broke, that's not the conversation you having. When you got money, he said, throw money at it. That's how you get out of the problem.
Robert Herjavec, he said similar. He was like, you should be able to sell your way out of anything because selling brings you more money.
Yep.
Yeah.
So if you, whatever problem you have in the business, you should be able to sell your way out of it. So I'm just taking a slightly different approach than him. I don't necessarily say, hey, we want to sell your way and you got to go in and grind your way through it. We're saying get the capital, raise you 3 years worth of capital. Like, what are the numbers in your business? What do you need over the next 3 years so you can just operate 500,000, a million, 1.5, and get that and actually use it to grow and scale the business. I mean, it's not easy, but it's doggone simple. It here's my parting gift for all of you. And I kind of shared it last night with the group. If you want to know if something's actually legitimate and it's going to work for your business, think about how complicated it is. If it starts getting complicated and you're confused, it's not it. Business is simple. The mechanics of doing business is very simple. It's not always easy, but it is very simple. So that's why when we go back to this whole infinite banking thing, and people gotta wrap up how you do it, and there's all kind of pieces and this and that, and you gotta be careful and you gotta watch, and that ain't legitimate to me.
Yeah. And I always say this too, Tyrus, too. If it's too confusing to understand, don't put your money behind it.
Don't do it. It's very simple. Reg CF is very simple. You do the paperwork, you file it, it gets approved, you raise the money, you go and you be a mouthpiece and bring the
Yep.
dollars in. Send them to the page, they read it. That's it. Now, getting it off the ground, it takes work, but it ain't confusing. So, with that said, because we could probably go another hour off of that, but we're gonna keep it tight. We're gonna keep it tight. Thank you for joining us. Remember, next week you can do your pre-homework. Jersey Mike's, that's who we're gonna be talking about. We're gonna watch their process, their step from going private, selling the private equity, and then prepare to go public. We appreciate you guys, and we'll see you on the next one.
Good job. Thanks,
God
Murray.
bless you guys.